Gold prices sank on Friday, losing almost 6.5% from mid-April's $3,500 record as risk assets rose, led by Western stock markets, setting fresh all-time highs on the MSCI World Index. Copper prices signaled tightening global supplies ahead of next week's U.S. trade tariffs review, while the U.S. dollar fell yet again despite a rise in U.S. inflation data. With President Trump apparently preparing to appoint a shadow chief at the Fed, naming the successor to Mr. Too Late, Terrible, Stupid, Very Low IQ, Jerome Powell, long before the current chair's term expires next May, betting on year-end U.S. interest rates tightened a little to 3.73%, markedly below the Fed's latest forecast of 3.9% repeated in last week's dot plot economic projections. Gold, meanwhile, fell to four-week lows, down 1.4% for the day, to fixing around $3,272 per troy ounce at London's 3 p.m. bullion auction, even as the dollar sank to a fresh four-year low on its DXY index against the rich world's other leading currencies. That helped push down the gold price in euro terms to €2,780, down 8.4% from mid-April's spot market record, at what was a new all-time high in early February. The UK gold price in pounds per ounce also sank as the dollar fell against sterling, dropping through £2,375 for the first time in 6 weeks, and now 9.0% beneath mid-April's peak, at what was also a new all-time high in February. With the first half of 2025 ending on Monday, gold today slipped behind copper as the best-performing major asset class across the past 6 months, up 24.3% since New Year's Eve against copper's 25% rise in US dollar terms. US stockpiles of base metal copper, sometimes called the metal with a PhD because of its importance to global economic activity, have now swollen for 15 weeks running, notes spread betting analyst Ola Hansen at Saxo Bank, growing larger than the inventories of all London Metal Exchange and Shanghai Futures Exchange warehouses combined. With the US accounting for less than 8% of global copper demand, says Hansen, this shift underscores growing tightness outside the US, with tariffs and trade flows increasingly distorting market balance. Please like this video and subscribe to our channel.